Welcome to ChaiTime Season 2.3, I think it is, the third one in the season, and I'm in a new location. I'm actually at my mum's house across the road because my kids have their friends around preschool start, the dog's going crazy, so I'm escaped to quieter climate. And I think the visual definitely looks better here. It's definitely brighter, and we haven't gone with our usual biotech focused science-based themes this week. We've got Max and John who have joined us, who come from more the tech background. You know, and o2h does have a tech group, o2h Technology, that a 50-person team that we're expanding in that space, and we're trying to develop our network and learning in the area. And who better to give us some guidance around how to build successful tech companies than two of Cambridge's probably most phenomenal investors and CEO entrepreneurs. And so we have Max at the bottom of my screen, John at the top left. And I'm going to hand over to John first of all to introduce himself.
Thanks, Sunil. So CEO of Grapeshot. It's actually the second business I set up with a chap called Martin Porter. He's a real guru in what we call search technology. So back in the 90s, we built a search engine that powered the BBC, Nokia, NASA, Web 1.0. And Muscat, he wanted to do something better. So Muscat made from grapes, type of wine. Shot was a good go at doing it better. So we had a search technology in about 2003. And I was thinking, what do we do? And I think the way to apply search is to actually look at all the words someone's reading live on a web page. And Grapeshot was a technology that understood, let's call it the DNA of a page, and tried to help advertisers work out whether they should bid on an ad. So if you look at an ad on the internet right now, it's not pre-placed. It's actually auctioned in real time in a 50 millisecond window, like an eBay auction. Happens about 4 billion times an hour. And our technology was telling people what was on the page. So they don't track you in terms of cookies and ID. All they do is contextually place an ad on the right page on the internet in real time.
John, this isn't your first business you've set up, is it? Is it your second startup that you've had, or your second major startup?
I've done a few startups, but Muscat was the first one in the 90s. We sold out 10x return to the investor, and Grapeshot did slightly better than that second time round.
And why did you decide to do it again? Most English entrepreneurs, they retire quietly to the Caribbean and you never see them again.
Right now I'm in another business post Grapeshot, but for me it was actually Martin coming back and saying, John, can you help me a second time round? I was in the middle of creating an early stage venture fund in Cambridge, and I suddenly thought, well, you know, I miss being right on the stuff. It's an adrenaline rush, I think, to sort of build something. You get huge highs and lows. Whereas that investor is often slightly arm's length. And perhaps we'll hear from Max a bit, but arm's length, you're slightly away from the action. So I'm a masochist. I go in for more.
Yeah, well, we see that a lot with the US entrepreneurs. They go back again and again, myself included. But it's not so common in the UK. But I think maybe that is changing somewhat. I mean, we, like people like you and I, I'm sure we enjoy the rush and the excitement, and you know, the part of living. It's almost a hobby, building and growing the companies that we do. So at that point, I'm going to hand over to Max and say, Max, tell us a little about your background and how you ended up in venture capital.
I started. I'm an economist by training, and by chance, I ended up working for a telecoms company that was starting and building new mobile operators in developing countries as my first job. So I literally had to, I ended up in a field with a bunch of equipment and sort of 20 million bucks in the bank account, and the job to be part of that very small startup team. And I think that's where I caught the startup bug, I guess, and then I looked after 3 operators, and then I went to Cambridge to do my MBA, and I bumped into a chap called Nigel Brown, was an asset manager, and they were starting a seed stage fund. They had a venture fund already and an angel network, and they wanted to build some seed investment around that, and that's what I decided I'd want to do, because that would bring me back into the kind of space of tech startups. So and a few years later, with my partners, and I started IQ Capital, and we've now grown it to kind of mid-sized VC that is focused on investing in deep tech in both software and hardware space around the UK. Not just.
And what's the size of your fund? What's the size of your current fund?
Current fund is 350 million. Sorry, $350 million, just over.
And did you ever think you'd raise a fund so big from when you started with small givings?
Well, yeah, I guess back then, I mean, you know, in pound terms, £250 million back then was the sort of the land of the biggest VCs. I mean, I remember the days when Amadeus raised 150 million, and it was scandalously large amount of money. So no, I guess not. I mean, you know, I never lacked ambition, but it just felt completely. It was private equity space, you know, these kinds of money, and these days, of course, 300 million is a small VC. It's still emerging, really. You know, it's some of the larger funds have, you know, billions under management. I don't know if it quite makes them venture, but yeah, they very much invest in.
You know, it's been great watching your rise within the Cambridge ecosystem, and it's really nice to see you've done so well. But I guess going back to John, one of the reasons why the fund has performed exceptionally well is because of Grapeshot. Let's not kid ourselves. This is a huge exit for any early stage seed investor. And we'll talk about the numbers in a moment, but from what I've read or I've heard through the you know, through other sources, it had a small amount of funding overall over the lifetime, maybe 25 odd million, and the exit was something like 350, 400, 450 million in that area. Although it's not been disclosed exactly what the number is, there is those reported figures out there. So that's obviously been a massive win for the fund. I'm going to go a little bit to John. What did you call that, by the way? Did it return your fund twice over?
Well, the story is, I mean, you know, we might hear about it later, but I didn't actually want to sell the company. You know, in late 2017, we were looking at private equity to buy out our investor IQ Capital and others who'd been in for 8 years, because at the time we were almost trebling our revenues. Our gross profit was well above 90%, which is typical in software, but our EBITDA was very healthy as well. So it didn't seem
incredible, by the way.
Yeah, we were growing. You know, we're in the sort of, I mean, I can't remember which year it was, but I remember going from 30 million to trying to go to 70 million. So about, you know, 5 to 6 million per month AAR. But you know, why sell? You shouldn't really sell. But anyway, Max kind of said afterwards, he said, John, you've done something rarer than being a unicorn. We all aspire to be a unicorn, but in terms of IQ Capital, we ended up being a double dragon. And Max explained that a double dragon is very rare because a single investment repays the fund not just once, but twice over. So is it an issue of capital efficiency? We only raised about 20, well, you said 25 million, it's thereabouts. Yet to get that yield, that return, is efficient use of capital. Whereas entrepreneurs like me, we like to build things, big things.
Yeah.
So, you know, what's the game? What's the game we're in?
It's funny you should say, because Prashant and I, when we sold our first company to a larger corporate, we had this, you know, it's a bizarre situation. We haven't had an exit before. We'd been, you know, hard up entrepreneurs for a number of years, and suddenly you're offered a fairly substantial amount of money. You got a young family, all these other things. It's like, you know, we really wanted to build and grow something bigger, but you know, part of us thinks that we just exited too early. We were on a particular trajectory like yourself, and there was a huge amount of regret. And at the same time, yeah, we think we did the right thing, but you can always say, well, actually, where would we be now if we hadn't sold up? We obviously had to sort of restart our machinery again. Do you have any regret of selling out when you sold out?
For me, that moment came when I had Muscat, the earlier business. I basically realized I didn't want to manage the business, so I got a new CEO in, and at the same time, someone approached to buy the company, and I said no. And then on a mobile phone, a very early mobile phone in sort of 1997, I think I upped the price by 30%. I thought, oh, well, okay. Because my investor at the time was saying, John, you know, you've got to sell. You've got a young family. You can go around and do it again. You know, you've got a few million in the bank. Do it. And I thought, okay, I'll do it. He retired soon after. So I thought perhaps the exit was his agenda. It wasn't mine. And I always thought with Grapeshot, look, you know, when we grow again, I'm going to auction this company, just like we auction the ads on the internet. But actually, as it turned out, you know, we auctioned across a lot of private equity. So we had various deals, you know, offers actually in full legal paper from a variety of investors by sort of December 2017. And I thought, great, you know, we've nailed this. We've got the capital in. We can carry on building the business. And we don't really need to sell out now. Because we're contextual advertising, in May 2018, European directives were all about you can't use the cookie. And that is really hit the advertising sector. Whereas we had a solution that didn't need cookies.
Just so I can, the audience can understand exactly what Grapeshot did. From what I understand in very much layman terms, it's kind of an algorithm that can provide intelligent placement of advertising within text or placing advertising in the right context, essentially. Yeah. And that's basically what it is.
Yeah, you're targeting a live ad impression based on what the customer's reading, the consumer's reading. So you don't track them.
That's relevant. That's, yeah.
So why sell the company again just before, you know, the whole decimation of the cookie strategy in advertising? So what we did is we auctioned across various private equity vendors, but we never auctioned across a multiple set of acquirers. I purposely chose bankers who only did secondary investments and turned down companies like Catalyst and Needham Technology that had better, you know, brokerage facility to say, we'll help you sell your company. We didn't really want to sell our company. In fact, most bankers say, you either sell a company if it's doing badly, but your company gets bought if it's doing well. And from my point of view, Oracle came along and bought our company, even though we had several really good private equity offers on the table.
I want to go into how you grew the company in a second. I'm just going to ask Max a little bit about when you spotted Grapeshot as a potential investment, how much you went in at, and how did the financing rounds then develop thereafter? And how did you support the company through its growth? So maybe you can talk a little bit about how you found Grapeshot first and how you spotted it and why you invested.
Well, it was back in 2008 that we invested, and I had known John for a few years, sort of by then as part of the ecosystem, and had a lot of respect for him. So when he started working on Grapeshot, and it eventually sort of surfaced, and I remember actually catching him in the train station and saying, "Come on, John, what's going on? You know, you surely need some money, and that's what we have." And I remember John was playing hard to get because he had some interested parties in London for sort of larger Series A round at a bigger price, and you know. So we did a little bit of a back and forth, but in the end it was a seed round with some Cambridge Angels and us coming in for what I remember was probably the first check was a few $100,000, so it was 1.5–2 million raise, and we did maybe up to about $1 million of that, and then the company took some time to find the product market fit. So there was a couple of internal fundraisings, and then eventually when we started showing strong growth and went into multi-million revenue, that's when we reached out to Albion and Draper and brought them on board as co-investors. But we unusually, because we invested out of a fairly small fund to start with, it was fund one, it was 25 million only, and it was kind of seed stage focused. So we ran out of capacity in that fund in terms of follow-on, even with the relatively small amount of fundraising that the company was doing. So we actually did a cross-fund investment, which is quite an unusual thing, and we convinced our our LPs from the next fund, which was thankfully pretty much the same bunch, that this is a growth story that is worth following. And back then it was doing about 5 million in turnover as a business, and we thought, you know, it would still have a 5x return. So that fund made a 9x return, but it did it in 2 years rather than 8 years for the seed stage investment. And actually the IRR, interestingly enough, of that late stage investment was higher. But it's the ability to follow the business from the very start to the stage, to the exit. And, you know, I think we still had almost 30% of the company when it eventually exited.
And because you're a seed stage investor, you're generally more hands-on than a later stage investor. And that was a seed investment for you. How were you able to support the company as it grew, as it sort of upped its gears and raised more money and developed its business?
I mean, some of it is a question to John as well, but I'll tell you from my perspective. Our number one thing, well, there's two things. One is building trust with the entrepreneur so that you can actually grow to that position as a sounding board where, you know, the entrepreneur is comfortable to share whatever concerns they have with you. And that's very difficult to do because naturally people are a little suspicious and it takes a while to really get that sense of trust. The second thing, and possibly a first thing, is that our hypothesis is to not add negative value. And this is by trying to help often actually end up hurting because they create a layer of bureaucracy, and the entrepreneur ends up wasting their time dealing with the VC or being pushed in the direction where they perhaps shouldn't go. So we focus on things that we think we can help with, and then the rest of it we're just trying to say, look, you know, if you feel like you need help, we're there. And
I can get that.
We'll talk. But we did, so we helped to find the chair, Tim Schoonmaker, as part of the very first round of financing. So he put some of his money in and was very, I think, from my perspective, instrumental in the strategy and the kind of help of growth of the business. Not to take away anything from the executive team and John, who did, of course, an absolutely unbelievable job in scaling this business. You know, we opened up the doors to fundraising. We sort of tried to help think through the international expansion. We were quite involved in the whole debate about is it fundraise an IPO or is it time?
Come back to that bit of it, and we'll come back to that part of it just because I want to try and get into a little bit more. You know, look, I like the thing about the negative value, by the way, because I mean sometimes when you've got an experienced entrepreneur like John, you just got to let them run with it. And when there are maybe people who are not so experienced, you can put more of your time there. But John, I'm just going to go over to you to really ask you. There's sort of two stages that you took.
Well, I want to respond to some of Max's points. I mean, I first met Max over a pizza as I was teaching at the business school, and Max was, you know, one of the young, you know, students there. And we always, in the Entrepreneurship Centre at Cambridge, thought the MBAs, you know, MBA stands for moving benches around. And so the thought of finance trained venture capital.
You know, we went to the same business school, John, just before you started slagging it off. And now I'm a fellow at the Entrepreneurship Centre.
Yeah. But the point is, you know, there's always that view that venture capitalists are finance trained, haven't really run a business. So, you know, why are you going to have them? And they could be negative for saying all the wrong things at the wrong time. And I think I did have offers from big VCs coming in, you know, let's give you 10 million. Oh, and by the way, we're going to recruit this rock star CEO for you. And I'm like, no, this is my business. You know, we're not doing that. And I think, you know, Max's approach was really helpful. So we always require an angel to invest. And I said, well, yeah, I've got some Cambridge Angels friends, having been, you know, one of the founders of Cambridge Angels. And in the end, they don't really know my market well. So Max said, let's go and headhunt your chairman. Oh, and by the way, he not only has to be your chairman, he has to personally invest £100,000, and then we'll co-invest. And that was really refreshing. You know, let's go out and get really good talent on the board. And I often say to entrepreneurs, you know, your board is not there as kind of policemen seeing how well their investment's going. You know, I would prepare for board meetings by putting all the dirty laundry out on the table and saying, guys, you're here to help me, so help. And, you know, it was very constructive input from the chair and from Max and others on that basis.
That's great to hear. So I was going to delve into a little bit about the startup stage and maybe a little bit more emphasis on how you actually scaled up the business, because we talk a lot on the ChaiTimes around starting companies and how we get things moving in the early stages, but you have the experience of not only doing the startup phase a couple of times, but actually scaling this one to a fairly significant amount of revenue. So if you could share some wisdom of some of the tips that you learned when you started up, and then also as you scale the business, what you learned and how to do that.
Sure. Well, I always think the early stage is like a little dinghy in the waters, choppy waters, and you're not really sure what compass bearing you should have as a business, and you're not really sure of the resources you have to hand or how good your technology is, you know, what's in the boat, how all the kit might work. So I always prefer a real test. And so I like to test with 4 or 5 customers, get close to them and try and understand what problems are we solving. And we started Grapeshot on the sell side of the market, so with publishers. And our chairman used to run a publishing group called EMAP. So the publishers try and sell ads. So we're trying to work out, yes, you know, how do we sell these ads? And you have to listen closely with customers. And I got turned down by AOL at the time. And it was someone from, I think, AOL later who moved to a different job to Group M, which was a big media group. And he rang me and said, John, I think you can help us on the buy side. So suddenly I'm experimenting with buy side, where there are these kind of trading desks. And you basically have a trader saying, I'm going to buy these ads and I'm going to use cookie tracking technology X. And I was like, how about context over here? Why? And working closely with 1 or 2 customers proved to me that there was an opportunity in the buy side of the market. And I think here it was about finding the right part of the market. Yes, we knew digital advertising was important, but you kind of had to worm your way in, find the right slot, work closely with a tier 1 leader. You know, if you talk to companies like Arm, you know, they really worked with Sony and other big sort of consumer electronic providers in the early days to really get that tier 1 respectability. And I think once you get that, then you need oxygen. You need oxygen for the fire, you need the capital, and then you need all your staff to really go rush at it. I think it would be wrong to have got too much capital too soon. You have to really smell exactly where the need is that you're solving. It's not about proving your technology is good. It's not about getting lots of customers, but going for a narrow set really deep. And only when you've actually really proven the touch points, then you need the scale. And that's bodies.
That's great advice. I
really
can't say how much I think that's brilliant advice for anyone who's thinking about building and scaling their businesses. That is, I 100% agree with that. And how did you then scale the team? I mean, how did you prioritize your hires? So the question from Craig, who runs o2h Tech, is, you know, how did you prioritize? Was it about operations, sales, marketing, strong developers?
Yeah, I mean, some of the developers, I mean, they're gold dust, and you know, a good developer is actually worth 5 developers who are sort of generally average. So I think it's about recruiting talent. And I mean, I'm not a coder myself, but I did work out the command line versions of both Muscat and then Grapeshot. So as a CEO, I kind of had awareness of how the core technology worked. And I could slightly counter a bit if I felt someone was saying something wouldn't work. But I actually started in the early days of Grapeshot by recruiting people I'd already worked with. So I'm kind of recycling talent that I know. It's less risky. And essentially there was one instance where I know I needed some strong back-end systems where our software wouldn't fail. And I approached this guy, Chris, and I said, look, Chris, you know, I really want to employ you. And he said, no, I'm busy. And then I gave him a really big problem to solve. I said, I'm going to be doing billions of calls a month, not just hundreds of millions. And he said, I'll join as long as I can employ Mark as well. You know, get Mark. So I got 2 of them. And I think, you know, getting core people who you trust, and you know, Mark had worked with me before, and building a foundation of excellence means they're starting to recruit people at a high bar. And I think one of the dangers is recruiting people fast because you think you need them, but not seeking the quality at the same time. So I'd much rather turn down 60 people before I get the really good person. And I think, you know, recruiting is a very important early part, but unfortunately in a small team, you can't get the specialists. So I had a really good operations director who, you know, he did finance on a spreadsheet. He did some of the scrums per day, almost watching over the technical team in Cambridge whilst I roamed London or New York or different parts of the market. So again, you need people you can trust to kind of watch the different bases. But as you grow, you start to almost have to say goodbye to some of the people as you get more specialist capability, you know, looking after finance, looking after HR, and very much looking after the technology.
On that talent side, you know, you grew your business when it was a tech boom in Cambridge, and it must have been quite hard to get the right talent into the company. And like you said, Cambridge, although it has a tech ecosystem, it doesn't have the, you know, we still don't have very many people in Cambridge at the end of the day. How did you, and now it could be different. You could be bringing people in from other countries into the UK. Cambridge is a much larger tech and biotech ecosystem than it ever was. How did you bring some of that talent, that specialist talent?
I think the answer is slowly, and it was frustratingly slowly. We'd say, you know, my tech team would be saying no to lots of different people. Sometimes we'd hire someone we thought they were really good, but they would churn out really, really fast. We did successfully hire from, you know, some people, you know, from Google, both on business development and then engineering wise, but they're different cultures. By that time they were big. I mean, I first knew Google when they had 7 employees. I knew Craig, who was employee number 1, very well, CTO. You know, that's an amazing company that really has scaled. You know, Grapeshot's a little minnow there. But in the search technology world, you know, Cambridge actually has some specialists, and Martin Porter, my co-founder, was a real specialist. So, you know, we had pedigree in terms of our academic backgrounds. I even had sales calls in New York that said, I only took the meeting because of who your co-founder is, because he's the most cited information retrieval scientist in the world in the academic field. So in a way, Cambridge gives us the pedigree, it gives us the depth. We can't get enough talent around. So we do end up wanting to grow dev teams in other places, but right up till the acquisition, all our software was being written in Cambridge.
Yeah, I mean, part of the lockdown means that we've been forced to do things like all my board calls are now on Zoom. We're all taking Zoom calls left, right, and center. So now I'm thinking, given that this technology is working for us, I am now thinking about having people from around the world on my board, not just because they're in Cambridge in the right time, you know, right place. You know, if we need someone from Boston or someone from India, or someone from Singapore on the board because it's the right brain to have there. Now with technology, it kind of makes it, you can access remote talent, whereas pre-COVID almost, if you developed a board, it's like, well, it's going to be face-to-face, who can come within the UK. So I wonder if this lockdown would broaden the way that we bring talent and brain power into our companies.
I don't know, Sunil. I mean, you know, the dev team, which I was talking about, the technical team, not the board team, the technical team was very focused. And I think there's a serendipity. I always find some of the innovative bits happen around the cooler or around the coffee. In our Cambridge office, we invested in a really big kitchen area, and it was always the spark of the unexpected in conversation that was such a catalyst. So I don't believe in this sort of, you know, total Zoom or work at home world myself. What I do believe in is a culture, and I think people come to work not to earn money. They come to work with a mission. So how do you convey that mission? And we found when we grew teams in like Toronto, New York, San Francisco, Hong Kong, Sydney, Singapore, we were recruiting people from a very different ethnic culture, a different language. And so we would fly them into Cambridge in a sort of Cambridge Grapeshot Academy to try and teach them our values and our methods, because I really focused on culture. And I did once had a dinner at the famous business school that you and Max had obviously attended. And I spoke to the dean in front of a set of entrepreneurs. And I said, I'm having a problem with my culture. I'm growing so fast. I'm growing from 100 staff to 200 staff in a year. And I don't feel I can hold on to this culture. He said, oh, you know, culture, that's not very important. And then there was a founder of Arm sitting next to me. He said, no, culture is the spine. That's the spine of the business that allows you to, you know, to endure the downs, but really group the people on, you know, as you project fast into the world. So I liken startup growth to, zealotry, real sense of mission and purpose. And I think it's really important to think about culture.
No, I've heard from your former employees that you're a great. Yeah, it was a great working environment. The culture was very strong at Grapeshot, and that you were very approachable personally. And these were sort of for more junior members of the staff. So I've always heard good things about Grapeshot. And o2h, it's not really about us, but it's, Prashant, my brother and co-founder, has always been a strong advocate of building a really strong culture within the team. And we both have actually, but, he's been leading that part of the spine of o2h, and it's really helped us to scale and grow and make it an enjoyable workplace as well. So I completely agree about the culture and the team and the values that you create. I'm going to swing over to Max, because Max can talk probably more openly than you about certain aspects of the value and the growth, and why Oracle and not Oracle, and the options are on the table. Obviously, this deal is still fairly recent, and everyone has legal ties as to what they can and can't say. And I'm not going to ask you to say anything or ask you anything which you feel that legally may put you in difficult grounds. But I would like to understand a little bit more, maybe from Max to start with, around why you decided to sell the business. Why did you not take another investment round on? Why did you were having significant tens of millions of revenues or more? Why you didn't just scale the business and grow profitably? What made you sell, first of all?
I mean, ultimately, it's a question that every company these days asks itself, how to optimize that, building and liquidity cycles. I think, and increasingly in the growth stage companies that we still have in our portfolio, later stage sort of Series B plus fundraisings always have a significant secondary element. So to the extent that any shareholders feel that they've been with the company enough, be them angels or smaller VCs, or indeed you want to sell some of your holding, you can do that, and that's very useful. And Grapeshot was actually the first company where, because for a long time secondary sales, sort of post 2000 really, they grew out of fashion, and the sort of prices that the secondary specialists would offer were significantly below market and significantly below what a trade buyer would offer. And now that is not necessarily the case, or at least that delta is much shorter. And Grapeshot was one of the first that I saw where we had several term sheets from large PE players who were prepared to fund the business. As John was saying, it was growing tremendously well, showing 2.5 times growth rates, wonderful economics, profitable, cash flow positive, and pretty bright strategic prospects in front of it. However, Oracle did throw the spanner in the works in a way, because they offered they offered materially above what the other term sheets were. And I think also this thing about the GDPR and the cookie and the impact on the industry threw a lot of concern into the PE side of things, because I'm not sure that they understood the business enough to really appreciate the difference. And we were sort of starting to see that the whole space might become quite turbulent. So I think Oracle played their card incredibly well, and I think ultimately there was a lot of debates around the board of, do we build, do we go, and in the end, I think the majority.
Max, can you just answer Dean's question in that answer? Because John mentioned that the PE investors are willing to pay more in each round.
Yeah.
So why did you go with Oracle in that case?
No. Oracle was offering, Oracle offered significantly more the PE. PE was
Are you,
not.
are you allowed
PE,
to say what the exit value was, a multiple of revenues, a multiple of EBITDA? What are you allowed to say there? What can you say?
Well, let's put it this way. The reports that I have seen in the press were putting it between 350 and $400 million. The company was doing on a run rate, was going at about 65, $70 million when it was sold. But on the last 12 months revenue, it was, I think it was around sort of 35. So it was, because it was still growing so fast. So, you know, we obviously packed it to the rest of the market, and it was an exceptionally nice last 12 months revenue, not as nice forward 12 months revenue, and that was reflecting that. And I think 2018 was also a year where there was a lot of the concern around the economic cycle and whether there would be correction, and there was just a lot of noise. So, and I guess the thing that you take into account is you know, what's the plan B? We were looking at the possibility of an IPO in a couple of years' time, which could be very attractive, and there was a lot of support for that. You know, the good thing is that you have multiple options, and then each company will find its own answer, and each investor will find its own answer. And Grapeshot gave that optionality for the stakeholders.
Was the board unanimous on the decision to take the Oracle offer? Was it that clear cut?
I think there was a lot of debate, or I recall that there was quite a bit of debate about, you know, where to go. But in the end, there was consensus. I mean, there's always a degree of preference for the management to just keep building things. But then it's a question of what do we need? What do we need by way of resources, by way of team? How we scale that? So there was quite a bit of thinking. I mean, let's put it this way. The fact that we're working closely with John post the investment, and you know, John actually, we haven't made a big announcement out of it, but John is a venture partner in AQ Capital, so that shows that those discussions were always very constructive, and of course there were other investors, but I think John will have a perspective on that as well, because he was
yeah. So you know, when you're looking for private equity, where typically, you know, someone's offering to put 100 million on the table to buy a minority stake in a business, and typically the conversations I was having was, well, you know, we could do with another 10 million, you know, into the company, but we're profitable, so we don't actually need money. We just need to cycle out our old investors. So from basically the summer of 2017. Ended up planning a roadshow, and we chose a banker who only really did secondaries. So I was talking to our investors and saying, you know, let's try and cycle out, you know, some of your early capital. I seem to remember doing around 35 meetings across New York, London, Boston, and San Francisco. And, you know, it was good because, you know, some meetings with some of the famous VCs, I thought, don't even like their culture. But the ones that we did connect with, I think we had 4 or 5 formal offers by Christmas. And that's the way I saw the world. But, you know, we didn't go and court lots of acquirers. So, you know, if we auction ads, for me, you know, I feel bad because, you know, if we were going to sell a company, we should have run a proper auction process. But as Max says, private equity was pretty strong at that time. You were getting sort of 6 times, 7 times value. And I spoke at a conference in London in 2017, met some people from Providence Equity and other PE, and they were like, yeah, no, you know, it's a strong market. So we were going into a strong PE strategy. And obviously, you know, Oracle being active in the advertising industry, I'm sure was aware of, you know, how context could offset any damage in behavioral. And I'm sure we really helped them in the GDPR world. But from my point of view, we got a double dragon, rarer than a unicorn. It was capital efficiency. And so with a bit of capital, the one thing I need to do is put my capital with IQ Capital and back into the Cambridge ecosystem, so we can go and do it again. So at the end of the day, the proud thing is to build a company with, a few people. One time we could all fit around the same table in the pub, and then you grow and you invite all the spouses and partners to the Christmas event, and you grow this team and you grow this culture. It's like growing a family. And so it's always sad when you say goodbye to that. I still meet up with some Grapeshot people, and right now I'm hiring some software people I've previously worked with at Grapeshot to go and do another thing. We fight another day. So there's always a new thing to put all your passion and energy into.
What do you think? What do you think? Or you may know, or what can you say about what Oracle are now doing with that business and how they're growing it? Is it doing well?
I don't even know. There's no, I haven't stayed close to what's happening.
That whole kind of intelligent advertising space, in a way, there are so many other players that have moved into that space, but obviously the area has expanded. But I think Google and they're all in it now. They all have to be in that area of trying to do intelligent advertising in the way they contextualize their ads. Has the market just grown exponentially since when you sold it, or is this more?
I mean, every company has to do marketing, and I think digital marketing makes sense. A lot of people in small business are aware of things like Google AdSense or Google AdWords, but these are big brands with very rich media. But I find much more stimulating is the conversation, who knows how to do digital marketing? So I'm more interested in whether it's HubSpot or Salesforce CRM systems and how you plug it into the, garnering all the digital signal from all your digital touch points as a business. So although I own some very small businesses, I'm up here in Scotland, I'm putting data and marketing intelligence right at the heart of it. So I play the same game, but in a different guise.
For the last 3 or 4 minutes, I just want to ask you both, where do you think the exciting areas are in tech? We always hear about AI and machine learning, but what maybe industries and which technology you think that you would be keen to invest into? Where do you think are the hot areas for the next 5 years? So maybe to Max first.
Well, our investment hypothesis is deep tech. We love investing in things which are hard, because that ultimately gives these businesses the differentiation in the long run. And if they succeed with product market fit, they end up having a very strong technology model around their propositions. And that means that they can scale, to tens and hundreds of millions of dollars of revenue well ahead of their competition, a bit like Grapeshot did. Despite the fact that there were other players in the market, there was always very strong USPs, and this business could have and has done incredibly well. I mean, I've actually been hearing from a couple of people still left in Oracle, and I think Oracle couldn't be happier with the acquisition. They've grown it many times over by now. And it's been very much the fabric of their ad strategy now. So so for us, the art of the improbable, the really hard things is what makes sense. And that bubble, a little bit like the known universe, is expanding all the time. So we prefer to invest at that bleeding edge where others struggle to understand the potential, and we can.
Are there any industries in particular that you think are very exciting at the moment?
Well, as it's hard to avoid AI in different applications. So in life sciences and bioinformatics and kind of using AI for medical data in different shapes and forms is very exciting. Data on the other side, and the privacy element of data, and the cyber security element of data, and using, preparing data, be it synthetic data or removing biases, protecting personalization is a big thing for us. There's a few industries that, due to their historic protectionism, like banking and insurance, that we very much like, because we think on the business side there, those companies sometimes are not quite as deep tech, but the nature of the industry itself has created a very fertile ground for disruption, and we have made a few investments in that space. So that's neurotech is another area that we have done a couple of bets in.
Thanks, Max. John, just running out of time, so I'll give the last word to you. Is where do you think where the investments that you would make, what industries, which technologies, and also to answer Craig's question is what's your next project?
Well, I think the interesting interface is through, from sort of the biotech space and the software space. I think a lot of biotech people can understand the theory of software and data collection, but don't have the engineering depth to know how to build it at scale. At Grapeshot, we were typically, for a customer instance, doing 2 million queries per second. And as I said, making 4 billion decisions an hour. And in biotech, you can collect a lot of signal through your various arrays and things. But I think there's few people who know how to really do it well. So, can you build a plane or can you build a fighter pilot plane? They're two very different things. And how you do the engineering is where I would invest. And then what I'm doing, well, I own a little pie shop up in Scotland. And what I'm doing is taking a mum and pop business and really putting the data tentacles right around it. And I'm actually building software stacks in the hospitality sector, because you find these sectors that have no use of technology. Their consumers are digitally rich in the way they go online and do things. But if you run a restaurant, a hotel, or a castle, you don't actually, these people are just Neanderthals. So how do you put software that works, that's simple, easy, and convenient, just like that iPod or iPad experience? So I find, the real challenge is doing complicated software in the back end, but making it terribly easy to use. And that's what we did in the digital advertising. We had 24-year-olds using our software, and they were lazy and they just had to use it quick. And so the secret of success is make it simple, easy, and convenient. And that's what you need to do in an app. So I'm choosing a very hard sector at the moment that doesn't really understand technology, but it's fun.
That's great advice, John. So, I can't agree more about the AI and biotech space. Obviously, we have a strong interest in that area. But I'd just like to wrap up and say, look, John, Max, great having you both on here. Really appreciate you making the time to come on. I know you've both been really busy and running businesses and all over the UK doing things. It's been a great session. I'm sure we're going to get a lot of very, very positive feedback on the back of this. And look, we really appreciate you sharing all your experiences, and hopefully we can learn from some of those and incorporate those ideas into what we do from day to day. So thank you very much, both of you.
Okay, thank you.
It's been great. Thank you very much for the invite. It's been a pleasure.
Thank you, guys.
Thanks, Sunil.
And so we're back in 2 weeks' time with another ChaiTime, which is on AI and drug discovery, interesting enough. And we have CEO of Benevolent chairing that session. So we have a guest chair in for that. And we have an Anglo-American panel. More to follow on that, and the invites will follow soon. But hopefully we see you all again then. Thank you and goodbye.
Bye.